California Governor Gavin Newsom, a vocal proponent of electric vehicles, on Friday debuted a new proposal that would earmark $3.2 billion to boost EV infrastructure and adoption in the state. Over half of the $3.2 billion budget would go toward replacing 1,150 trucks, 1,000 transit buses, and 1,000 school buses with electric models. Another $800 million would be put toward the state's Clean Cars for All program, which aims to help lower-income drivers upgrade to a zero or near-zero car, as well as further rebates or clean vehicles. The proposal earmarks $500 million toward infrastructure and $250 million would go toward manufacturing grants. Newsom did not specify what type of infrastructure programs would qualify. It's likely those funds would go toward charging. Last September, Newsom signed an executive order to phase out internal combustion engine passenger vehicles from being sold in the state by 2035. Transportation accounts for over half of all carbon emissions in the state. On January 25, Biden announced an executive order that will convert the U.S. government's 645,000-strong fleet of vehicles to battery-powered vehicles. With a core focus on reducing emissions and setting an example for the country to shift to EVs, the EO also aims to bolster the U.S. purchasing power to buy EVs from American businesses and U.S.-made products. Also included in Biden's ambitious infrastructure plan is the proposal of 500,000 new EV charging stations across the U.S. The plan calls for every one of these 500,000 chargers to be installed by 2030, providing funds for grants and incentive programs for state and local governments, as well as private companies. However, electric vehicle investors are going through a brutal stretch after an epic year. Shares fell hard across the sector on Wednesday as concern about inflation joined the list of worries dragging on the shares. Stock in Tesla, ticker TSLA, the leader of the EV pack, dropped 4.4% Wednesday, closing below $600 a share for the first time since early March. Tesla stock is down about 34% from its January 52-week high of more than $900 a share. The average drop from 52-week highs for the rest of the EV names is about 70%. Investors just don't have the appetite for more speculative, higher growth stocks in the current environment. Behind all those declines was news early in the day that consumer prices increased 4.2% year-over-year in April, far higher than the Federal Reserve's 2% target. Inflation that high is like a parasite, eating into savings and sucking energy out of the economy. It also tends to hurt stock valuations, especially those of expensive growth companies that are expected to generate most of their cash flows far in the future. Higher inflation means higher bond yields, which reduce the current value of future cash flows, partly because higher rates give investors options to earn more interest on their money right now. Inflation is just the latest problem for the stocks. More competition in the EV business, with traditional automakers pouring billions into developing vehicles, is one problem. At the same time, the global shortage of semiconductors is constraining automotive production around the globe, making it hard for EV makers to benefit from red-hot demand for cars and rising gasoline price. What is more, many of the new EV companies became public by merging with special-purpose acquisition companies. Many SPAC stocks, not just the EV-related ones, are struggling. Only 5 remain above their SPAC merger price of $10 a share: Lucid, Fisker, FSR, Arrival, ARVL, QuantumScape, QS, and Nikola, NKLA. Investors might believe that means those are the long-term winners among the EV SPAC stocks. These transitions don't happen often in history. You're talking centuries or decades apart from each other.
Subscribe to my channel to be up to date about crypto and stock investment. See you soon with my latest crypto analysis. Have a great one.